And in our top business story, organisers of Cityscape Abu Dhabi expect to see a double-digit growth in visitor numbers as real estate confidence returns. According to Cluttons, the Abu Dhabi real estate market is growing steadily with ample room for growth. Last year, the Abu Dhabi economy maintained its strength while showing significant signs of change. According to Cluttons, the capital's non-oil sector, which includes real estate, education and healthcare, continued to expand its share of the economy, accounting for 45% of the total GDP, a 43% rise from 2012. These positive sentiments were reflected at the opening of Cityscape Abu Dhabi, with its participants significantly doubled. At the same time, His Excellency Falah Al-Ahbabi, General Manager of the Abu Dhabi Urban Planning Council, said the capital is taking on numerous initiatives that promote investment opportunities for the private sector. All these incorporate sustainability in development, wherein they focus on the key pillars of social, environment, economy and culture.
We have quite a few number of projects that are ongoing, and a lot of it is also we're looking into the revitalization of existing communities, like the communities of Al-Shahama, Baniyas, Al-Bahia, all of these areas where we're looking into the residents' needs and how we can improve it through the addition of parks, community markets and schools and all of the commercial needs that are required within these areas as well.
According to Cluttons Market's outlook for 2014, Abu Dhabi's residential market is witnessing robust growth. They expect the ongoing economic evolution to sustain the residential freehold market as buyer and tenant bases rapidly diversify. At present, they say there's still limited supply, which coupled with high demand will drive the price growth this year. While the uptake on the commercial side is still relatively slow, industry experts are confident that the upturn in the economy will filter through the office and industrial markets as well.
Abu Dhabi still has a lot of room for developments. There's a lot of opportunities there. There's a lot of the sectors, like I said, are growing. So there's opportunities for people to move to the marketplace, to move to the city and establish themselves and base themselves here. In terms of figures, for the past 2 quarters, we've seen 7% rise in residential values, quarter on quarter. I think even before that, the previous 2 quarters ago, it was 14% rise. So we're seeing that sort of stability. It's not over the past 2 quarters grown as fast as previously, but that's a good thing. It's showing sustained growth at the right speed. The commercial sector is still slightly subdued. We really want to see some more life coming into the private sector in terms of commercial, with more private businesses coming into Abu Dhabi. It's always been very propped up on the energy sector and on oil. We're seeing that the non-oil sector, though, is growing slowly and taking more of a market share. But at the moment, the size of the requirements that companies are taking is still limited. So we're hoping as the economy grows, we'll see more private companies come down. Once Sower Square is fully established into a financial free zone as well, we're hoping that will channel a bit more requirements from large corporates as well.
Aldar Properties has launched 3 major new residential developments in prime areas of Abu Dhabi, including in investment zones where property can be purchased by non-UAE nationals. Aldar's Deputy Chief Executive Mohammed Al Mubarak said the 3 new developments were in well-established locations that already had high demand. Off-plan sales for the 3 developments will commence in May, and construction is scheduled to begin in 2015. The 3 developments have a combined gross development value of approximately 5 billion dirhams. The Ansam development, the first phase of which comprises 540 golf fairway apartment units, will overlook Yas Link's golf course on Yas Island, the premier lifestyle destination in Abu Dhabi. Just across the bay from Yas Island, Aldar will develop the Al Hadil development at Al Bandar on the popular Al Raha Beach waterfront, offering 230 apartment and townhouse units. The third development is located on Nareel Island, where Aldar is offering a premier lifestyle residential waterfront master-planned development comprising of 143 villa plots that allow UAE nationals to develop bespoke homes. The island is close to the Al Batin area of central Abu Dhabi.
Well, I think if one were to go back 2 years, the turnaround was just beginning to come out of the corner. And the real trend in terms of increase in demand for rental property and also completed properties in Abu Dhabi begin to rear its head sometime in the second quarter of last year. Since then, we have seen rentals actually having gone up on an average of about 11%. Some locations saw rentals going up by up to 25%. But at the same time, I would say prices have been creeping at a slower rate in Abu Dhabi. Hence, a lot of people saw the opportunity to buy ready-made properties because as rental rates increased at a faster rate compared to the capital values, the yields were very interesting and very attractive. So you saw a lot of people coming to the market to actually start looking to firstly rent, and then after that there was an interesting conversion of people who are renting going into buying a ready-made property, and we saw that in the last 2 quarters in most of our developments, especially the Gate and Al Ghadir. And again, I think interesting to also point out that we are about 6 months or thereabouts behind the curve compared to Dubai, where yield compression started about 6 months ago. So 2 quarters ago, you saw yield compression happening in Dubai. Now you're seeing yield compression happening here in Abu Dhabi, and that will be an interesting trend going forward. It's opportune to therefore launch new developments.
Deyaar Development, the Dubai-based developer listed with Dubai Financial Market, on Monday received approval from local authorities to allocate 25% of share capital to foreign investors. Dubai Financial Market approved and activated the resolution following a recommendation by the company's board of directors that was approved by shareholders earlier this month. At present, investors in GCC countries can own up to 49% of Deyaar's shares, while those from outside the GCC have not been allowed to own any stake. Now foreign investors can own up to 25%, while Emiratis enjoy unlimited share allocation as long as the percentage of shares is maintained at 51% and above. The company's decision is part of a trend by the companies in the United Arab Emirates and Qatar to review their foreign ownership caps before international index compiler MSCI raises those countries to emerging market status in May, which is expected to attract fresh foreign money. And here's a quick overview of the oil, precious metals and currency markets.